That's where we begin today with Stephen Davis. He's senior fellow at the Hoover Institution and co-author of the Uncertainty Index, and CNBC senior economics reporter Steve Leisman. Welcome to both of you, Steves. Professor Davis, to you first. Are we receding now from such levels, or are we still elevated?
We're still elevated. I hope things will continue to improve in the sense of scaling back the tariff hikes. But, if we just take stock of what's happened so far, the Trump administration has basically been serving knuckle sandwiches to its trading partners in the form of tariff hikes and threats of more to come. That's led to retaliation in kind, prompting other countries to raise their tariffs on U.S. exports. If we continue down this path, we're going to get less imports and less exports. Most Americans don't benefit from that. There'll be a few firms and workers in protected sectors like steel and autos. But for most people, it just means higher prices. And for most firms, it'll mean higher costs. Most of us will lose. So I'm hopeful that the Trump administration is scaling back its plans to implement these reciprocal tariff hikes. But at this point, I don't know whether they just haven't figured out how to implement all the hikes they want to implement, or they really are reacting to what they see in the market and the economic indicators and saying, maybe we ought to scale this back a bit.
Right. For trade policy uncertainty, these are the highest levels we've ever seen, as we're showing there. Steve, again, these are on reports from a couple of different kind of publications out there that the president may be scaling back or delaying the April 2nd tariff announcements, which is all well and good. But until we get, something different than next hour or tomorrow or what have you.
I want to make a distinction, and I'm interested in the professor's view on this. There's a difference between the policy itself and the process of the policy. It was the process that I called insane not too long ago on this show. And if Professor Davis will excuse me, I do a 7-day average of his policy. So I get rid of the ups and downs if you go near term. And what that looks like, it's the sustained nature of it.
So we're still at the high. Well, that's only going back a year.
The market could process the policy, even if it didn't like it, if the process itself had some sense of, okay, there's a thing called a trial balloon. You have administrations over the decades, they release a trial balloon. They tell a couple reporters, a couple officials about it, and here you go. You till the firmament to get it ready, and then you let the policy out. There is no reason that we have to have this level of policy uncertainty. People can vehemently disagree with the policy and not be all that uncertain about what the policy is. And I'm afraid, Kelly, that today the market may be acting in relief of the policy, but I don't think the uncertainty is much lower. And I just real quickly, a conversation I had with a manufacturer who said he was going to benefit from tariffs, but he could not break ground on a plant because he wasn't sure if the tariffs would be in place that would advantage him economically.
Yeah.
So that's part of the uncertainty that